The quest for financial wealth will be a common ambition in 2024. Regardless of one's starting point, the path to creating money from nothing is fraught with chances and problems. Hello everyone, and welcome to a brand new video on the channel. Today we are going to talk about wealth mindset techniques for financial independence for 2024. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Number 10. Define your goals. The first step toward efficient financial management is to define what financial independence means to you. It could represent a debt-free lifestyle, the capacity to retire early, or the freedom to leave your job and start your own business. Determine your financial objectives and develop clear, practical measures to accomplish them. Once you've determined your objective, you can begin saving for it based on your risk tolerance. If you are a conservative investor, you can place a large portion of your portfolio in fixed income instruments. But if your risk tolerance is higher, you can benefit from the higher long-term returns provided by equities. Number 9. Review your savings goals and boost your contributions. Many of us are working hard to meet our savings objectives before the year 2023 expires. You might want to revisit the savings goals you established for yourself at the start of the year to see how you're doing. Increasing your savings contributions can be beneficial if you can afford it. Even a small improvement, such as saving an extra $50 each month, can make a significant difference. Building a strong emergency fund and saving for future expenditures will help you financially plan for the future. Number 8. Stash your extra cash in a savings account. Keeping your spare cash in your bank account serves no purpose. Now is a good moment to transfer your assets to a high-yield savings account, since you may take advantage of the current favorable interest rates. Getting paid to keep your money in a bank account that earns interest can help you attain your savings objectives sooner. I've kept my earnings in Ally Earnings and have made over $500 so far this year. Number 7. Prioritize eliminating high-interest debt. If you have high-interest debt, such as credit card debt, it is important to pay it off as quickly as possible. Otherwise, it will continue to grow rapidly. If you can afford to put more money toward your debt, you will be able to pay it off sooner and save money in the long term by paying less interest. You can use our credit card interest calculator to figure out how much extra you should spend toward your debt in order to meet your debt repayment target by the end of the year. If you have a large amount of credit card debt and it feels daunting, you may choose to establish a balance transfer credit card to save on interest rates while you work hard to pay off your debt. Number 6. Increase your retirement contributions. Even if you're in your 20s or 30s, now is the time to start thinking about retirement. That's great if you're already investing in a retirement account. It doesn't hurt, however, to boost your contributions. If possible, it can be advantageous to contribute the maximum amount for the year. Even if you are unable to do so, boosting your contributions somewhat is a sensible choice. If you have a retirement account that may be used to lower your taxable income, such as a traditional IRA, increasing your contributions can also help you save money on your annual tax bill. Because compound interest allows you to receive interest on both the starting balance and any interest gained, investing extra money throughout your early working years can be beneficial. Number 5. Perform a financial wellness checkup. If you don't check your finances on a regular basis, it might be difficult to know what's working for you and what you might need to change. However, by checking your most current bank and credit card accounts for the year, you may determine what modifications you might want to make before 2024 begins. If you've been overspending, you might consider using budgeting apps to keep track of your spending and stay on track to prevent going into debt. Number 4. Financial discipline. It is critical to educate yourself on personal finance. Learn the fundamentals of financial planning, investment, and taxation. Develop financial discipline as well. Constantly save, invest, and avoid excessive loans. Furthermore, you should examine and analyze your portfolio at least once a year so that you can rebalance it if your asset allocation approach diverges. Number 3. Live within your means. It is critical that you spend less than you make. This appears to be an easy task, but many people struggle with it. Make it a habit to set and stick to monthly budgets. Avoid impulse purchases and unneeded debts, and constantly make an effort to preserve a portion of your salary, no matter how modest. The golden rule is to save first and then spend, as opposed to spending first and saving afterward. You can take the first step toward financial independence by saving at least 10 to 20% of your salary. Number 2. Invest wisely. Investing is one of the most efficient ways to increase your net worth. Take the time to learn about the various investment alternatives available and determine which one is best for you. Remember that following trends isn't as important as making informed selections that match your financial goals. The first and most important step is to begin a systematic investment plan, or SIP, in a long-term mutual fund. By doing so, you can unlock the value of better returns by investing in the stock market for the long term. Number 1. Earn money. Earning money is the starting point for accumulating wealth. This can be accomplished through traditional employment, the startup of a business, freelancing, or investing. For example, you could work a full-time job while also working as a freelance graphic designer to augment your income. That's a wrap on the video. I hope you liked it. If you did, let me know by giving it a thumbs up, and do not forget to subscribe. Thanks for watching. See you next time.